Hi guys, good morning everyone. Welcome to the session. All these wealth creation steps with TNAI services. We are dedicated financial solutions company specializing in training, investment strategies, personal finance consultations, and financial education. Our mission is simple: to help individuals and business take control of their money, make informed financial decisions, and achieve true financial freedom. Over the next few slides, I'll walk you through our approach, our services, and how we can work together to turn your income into a lasting wealth. Let's move. Coming to this agenda of this today's session is before we dive into details, let me walk through our agenda for today. This will give you a clear roadmap of what we will be covering and how the session will flow. So, in first about the company, we'll start with an introduction to our company, sharing our story, mission, and philosophy. Then we'll go to our performance results. Like you'll review our performance over the last 5 years from 2020 to 2025. I'll take you through what we have been doing, the results we have achieved, and the progress we have made towards our goal. Then we'll go a little bit on personal finance. Then we'll shift to focus. Like I'll share some key personal finance secrets, explore different investment options, and outline strategies for effective financial planning. Then to achieve those financial personal finance, we'll go to we'll dive into our core strategies, including wealth creations, investment approaches, business models, algo trading techniques, and the power of compounding for long-term growth. And finally, we'll wrap up the summary like that covers risk management and growth strategies, and a brief look into our clubs like gold clubs and platinum clubs. So coming to our story, this is a small story. Uh, uh, like uh, let's talk about the story behind fintech research. We begin with a simple idea to bridge the gap between complex financial systems and a financial freedom for everybody. Over time, that idea evolved into a mission-driven organization focused on financial education, research, and empowerment. Our mission is to make finance accessible, transparent, and actionable for all, regardless of background or income level. We drives us in our core philosophy. We believe that financial literacy is not just a skill; it is a life tool, or you can say it is a life skill. With the right guidance and data, everyone can make smarter, confident financial decisions. Our products and services reflect that philosophy. From curated research reports, financial tools, algorithm based learning platforms, to interactive community educations, we have designed everything to bring clarity and confidence to our users. And finally, we are proud of the key achievements we have accomplished so far, growing our user base, impacting lives, collaborating with our friends and other people, and continue to innovate in this fast changing sector. This is more than just a business. It is a movement towards financial wisdom. Let's move on. Let me take you through our journey so far. We began our research journey in 2016, exploring various investment opportunities, trying to understand what truly works for the Indian investors. And between 2017 and 2020, we narrowed our focus on mutual funds. And through a disciplined research and portfolio analysis, we managed to achieve a impressive CAGR of 17% year-on-year growth. So it validated our belief in a data-driven investing. Then coming to From 2020 to 2024, we focused more on fixed deposits, mutual funds, and also some future and options trading. So this comprehensive approach helped us to raise the bar, and we achieved a remarkable 25% CAGR. Each of these milestones is not just a number; it reflects the trust of our community, the strength of our strategies, and the commitment of our team. Coming to the what mission is driving us. Our mission is simple but powerful. We aim to deliver a data-driven insight that don't just inform but actually empower individuals and business. But whether someone is just starting their financial journey or already managing wealth, our goal is to provide the right tools, guidance, and support to help them move towards a true financial freedom. At the heart of everything we do is a desire to help achieve financial independence. So, uh, once someone can achieve a financial independence, they're more they live with more happiness, confidence, and peace of mind. Coming to our philosophy. Philosophy is very simple. This slide beautifully captures the core of our philosophy. So financial freedom is not just a luxury; it is a foundation of true achievement. Imagine walking on a road where every step you take brings you closer to a life of choices, not just survival. That is the journey we want everyone to take. When someone achieves a financial freedom, they gain the power to say yes to the things that truly matter. Whether it is spending time with family, pursuing a passion, or simply living without stress. That's why we believe true achievement begins with financial freedom. Because with financial freedom, even success feels limited. Uh, but Meaning, sorry, without a financial freedom, even success feels limited. But with it, possibilities are endless. So, in the key achievements we have did uh, let's talk about numbers. Over the last 5 years, we have consistently delivered a 25% CAGR on our portfolio, not just once or by luck, but through discipline, data-driven approach and strategies. So we did not rely on guesswork. So we built a data-driven analysis tool using Python, AWS, MySQL to take informed research-backed decisions in both trading and investing. And finally, the most important part is we developed strategies, not just for short-term gains, but for a sustained long-term success. That's what makes difference between speculation and true wealth creation. So these achievements are not just numbers. They are proof that we with the right approach, consistent performance is absolutely possible. So let's move on. Okay. So as a company, what we do? So uh, our work is broadly divided into five key pillars. One is called analysis, then research, then training, then strength and technology. Starting with analysis, we specialize in financial data analysis, trading, algorithmic design, mutual fund analysis, and creating strategies using a Tetron or Python based algorithmic trading. Moving to research, our team designs financial models, manages personal finance strategies, optimize risk reward ratios, develop risk mitigation approaches for portfolios. So in training, we empower clients with knowledge. We have first program on portfolio, protecting your portfolios, building them effectively, creating wealth, and training specifically for different option strategies. Those are available. Next, our strength is we are proficient. high frequency trading. I'll not say very high frequency, it is a medium frequency trading. And advanced strategy design, automated backtesting, manual backtesting, implementing the new AI ML like LLM models to enhance our features. And finally, the technology stack we use like Python for coding, AWS for cloud deployments, MySQL for database management, and cloud computation for infrastructure and supports and scalable solutions. So in short, we bring together a deep financial insight, solid research, practical training, and then cutting edge deep research and strategies, and strong technology capabilities to deliver results that matter because we manage our own money. So the next few slides we'll go through from 2020 in 2024 ending, like what is the performance, what is the personal finance. We'll little bit cover on personal finance secret and what are the investment options are there and how this financial planning is going to help us. So coming uh, to look at the returns we generated in from 2020 and 2024. If you see the table and the year-age return percentage in 2020, we achieved a return of 27.50%, and in 2021, saw a jump which is 41.25, our highest in this period. In 2022, the return was close to 27.6%. It improved to 32% in 2023, and in 2024 we closed with a solid 30% return. So these numbers does not reflect just a by our luck we achieved. It is with a consistent performance with controlled drawdowns. This is the key part of our investment strategies. So this performance builds our confidence in scaling further while continuing to manage risk effectively. Coming to this personal finance secrets, uh, let's this slide represents the core structure of personal finance training program. Like we guide individuals through the three key strategies of financial planning. First, we focus on the strong foundation. This includes understanding income and expenditure, budgeting, and a proper medical and term insurance, and building an emergency fund, and the knowledge, the basics of savings and return on investment. These are essential before any financial journey can begin. Next, we help clients to set and achieve a short-term goals. This includes could be a practical or immediate like child education, buying a car, upgrading a home or lifestyle, or taking a vacation. We also encourage goals like reskilling through higher education, even starting a side business. And finally, we help them to work towards long-term goals. Like this includes early retirement, building a passive income, achieving financial independence, starting a business, or even setting up a family trust and legacy. We also cover aspirational goals like luxury travel and philanthropy. Our training ensures individuals are not just saving and investing blindly, but working towards a clear, meaningful life goals with the step-by-step financial roadmap. In short, it is not just about money, it is about the purpose-driven financial planning. So let's move on. So here we have seen like in any financial plan, you have to understand the power of compounding. So this slide says like how much time it will take to your money to double or 5 times or 10 times or 20 times or 50 times or 100 times. And if I fix my annual growth rate, then how many years it will take? So this force, the slide is all about the power of compounding, the force that can turn small investment into a huge wealth over time. Look at the 24% row. 1 crore becomes 2 crore in 3 years, 5 crore in 7 years, 10 crore in 10 years, and staggering 100 crore in 20 years. Now compare with the just the 6% returns normally fixed deposit gives. It takes 12 years just to double, and unbelievable 78 years to reach 100x. The lesson is simple. Start early, aim for higher returns, and stay invested. With compounding time and rate of return, uh, you will get the best benefit in this. So many people don't aware of this slides like the numbers. How many years I will take to achieve something. So this power of compounding is comes from a rule of 72, and you can utilize this number of years you take. So you fix your risk according to it. So coming to this uh, investment options without any risk, this slides highlights different investment options uh, that are low or zero risk along with their expected returns over a 20-year period. Let's start from the top. Fixed deposits, government bonds, PPF all have zero risk and offer returns between 6.5 to 8% CAGR. With this initial capital of 1 crore, these options can grow your wealth to around 3.6 to 4.9 CR over 20 years. And the probability is 100%. So meaning is extremely highly reliable products. So similarly coming to apartments, while offer this also offers close to 8% CAGR, carry a minor risk of around 5% due to market fluctuations or liquidity issues. Then coming to the other investment opportunities are gold and land, offer higher returns and like 10 or 11% respectively. Over 20 years, gold can grow to 7.2 crores and land close to 8.8 crores. However, they come with a slightly negative returns also, like gold around minus 10% and land around minus 5%. Mostly related to price volatility, legal factors, and liquidity. So, what is important to note is that every option shown here is has 100% probability of generating wealth as long as you are patient and hold for the full 20 years. So when we are planning for long-term financial growth, it is about balancing safety with growth potential based on your risk appetite, like how much risk you can take. So as I showed, like you if you target to achieve everything a little bit faster, then we have to target for a little bit higher risk products. So now coming to the let's explore a little bit high risk investment options. I can say the medium risk to understand their long-term potentials. Starting with mutual funds, we can categorize them by market capitalizations, right? So large cap fund offers a CAGR of 14%, with downside risk of minus 40%. But if you invest 1 crore today, in 20 years, it could grow to 15.7 crore. And the probability is very high, 75% high probability if you see the historical performance. It's not guaranteed for the future, but it might happen as India is growing. Similarly, if you invest in mid-cap funds, have slightly more aggressive growth, like 16% CAGR, and drawdown is close to minus 50%. And this improves the 20 years return to 27.9 crores with the same probability of 75%. So then coming to the small cap funds, even riskier with 20% CAGR, you will have a 60% drawdown is possible. However, the reward is also significantly higher. So around 49.6 crore in 20 years. And probability is also very high, 7%, like if you stay more than 10 years or 20 years. Then we have a Nifty 50 index fund, relatively stable equity options and with a 12% CAGR, similar 40% risk, but what probability is very high, 80%, and because it is very stable and very big large cap funds are companies are there. So resulting into 10.6 crore in 20 years. And let's say you have money, like people invest in their own business. So lastly, the own business option stand out because it promises some close to 30% CAGR. Like who are successful, they have seen that the 30-40% they can grow. But the probability is that 80% probability is lost because every 100 business starts, 20 only 80% fails. So the probability of achieving this is close to 5% to 20%. But if you are successful, this can grow up to 300 crore, like same 1 crore. And if you spend 20 years on that business. Then coming to this new strategies, like our strategies we'll discuss later on, and which it is giving a very little bit from like higher return, very high return, but our risk is very less, and our probability is 70%. So the key takeaway from this slide is that higher returns potential often comes with higher risk. So it is very crucial balance between your investment based on your risk appetite, your financial goals, and your time horizon. Moving to this financial planning. So financial planning is important for everyone. This slides represents a realistic long-term financial planning roadmap. Let's say 21 years. We break down into four major milestones. First, let's say you are planning for having a dream home. But if you today I'll ask, then you will go ahead and do a down payment. Then whole life you are paying for a EMI. But we are thinking that okay, don't do in this way. That way, let's say you invest that down payment, let's say 20 lakh smartly today, and after 7 8 years, like it will grow to 1 crore, and that time you directly buy the house instead of paying a whole life of EMI. So similarly, coming to this child higher educations, planning early, like say for their higher education, you if you invest today, then you have enough money for their both educations and marriages. So similarly, as you're planning for retirement, retirement meaning like when you are not working and but you have some passive income is coming, which is we called as a systematic withdrawal plan. So if you invest your money very wisely today, you could have a close to 20 crore, like after 21 years. So and easily you can withdraw 2 lakh per month through this systematic plan, and your money will be still growing. So this stable income will have a peaceful you have a peaceful mind. So finally, like why this financial planning is all required, because your financial freedom. If you continue this discipline for next 20 years, no, you could grow your wealth to 20 crore or more in aggressive approach, or maybe 10 crore in a conservative approach. But that is a huge money, and that will give you true financial freedom, where like your work becomes optional, and your choices will be unlimited. So all this is possible if you start early, stay consistent, avoid unnecessary risks, and mm, it is not just investing. It is a completely life skill plan or life plan, I will say, to live better, life better, not just earning money or everything. Financial is just one part of the freedom. Okay, now the big questions is like how. These are all these big promises and everything. These numbers are looking very good, but how we are going to achieve? So, uh, in this journey, we are going to help. Like in the next few slides, we are going to achieve how. We have just seen what is possible with the right financial plan. But the big question is, mm, like whether it is possible. Uh, See, it is not a magic, and it is also not a luck. It is just a pure mathematics and your discipline and your psychology. So it is proven. Discipline strategies combined with smart investments, time-based, time-tested wealth building principles, and constant tracking to keep you on course. So in the next few slides, I will exactly show you how you turn this goal into reality, and in a step-by-step manner. So this is a very this is the slides we talked a lot about. Like, can I grow my 20 lakh capital into 1 crore in 7 years? Is it possible? Yes. So how? Because um, uh, you have to divide your money. Like if let's say you have a 20 lakh cash, or I'll take an example of it's 1 crore cash, whatever. So we first park on like first we will divide into two parts. One is called investment income, like like investment in a long term investment, using fixed deposit or advanced investment strategies. It gives you a stable like CAGR of 16%, and drawdown will be 4% instead of like earlier you have seen 50% or 30%. Here drawdown is 4%. There is, and you have to wait time period of 7 years. You have to wait. Then you place that money. You have something called a trading business income. So you your fixed deposits and mutual funds will be put as a collateral, and you run a low risk trading business based on your research algo strategies. So this income streams will give like close to 20%, and with a manageable drawdown of minus 15%. So instead of your FD sitting idle, it is actually generating additional cash flow. So combining these results, so you'll get close to 36% over 7 years CAGR. But after taxes and fees, it will be let's say 20 to 30%. I'll say average 24%. So this is powerful enough to double your capital every 3 years, and that's why this 20 lakh is coming to 1 crore in 7 years. And I've given this our Telegram group here. You can join to know more. Coming to this investment strategies, in this investment strategies, like how hedge fund works. So let's have a look in a deeper part of the strategies. So the long term things is you have to protect your capital first. So in investment, what do you do? You do a synthetic future, exactly similar like what you do in buying a Nifty Bees. Then we take a help of mutual fund, like a flexi cap or multi cap funds. Then we buy a protective put for risk management. This is to ensure this is a insurance layer. Just like you insure a car, your home. Here we protect your investment downside using options, buying put options. So if the market falls, your capital is protected. This is what gives you confidence to stay invested for longer time frame. Uh, then fixed deposit, it is also allocate few percent, like 60% or 70% of the money to fixed deposit for absolute safety. This acts like a cushion. Even a market turns rough, a part of your money is always in safe, guaranteed instruments. So combining all this, your average CAGR will be close to 16% with a maximum drawdown of minus 4%. So even in a bad year, your downside is limited, and while in upside is still strong. So this is a balanced, protected investment plan designed to give you a strong returns while keeping your moral safe, or your psychology safe or money safe. Here is an example. I'll show you. Like let's you have invested the money in index funds, or you have gone with a protection plan. This slides compares the performance of a Nifty 50 index funds versus our FINA strategies with a built-in protection. From 2025 to 2029, we will simulate. Like let's say Nifty has moved from to 3,000 to 20,000 in 24,000 and 16,000, 14, and 24,000 in 2028. Then in different scenarios, how this strategy would have done. So uh, a regular index fund, like if you see from 2025, Nifty sees a drop in 2027. Like from 2026 to 27, it has came down to 8,000, which is close to 33%. And a regular index fund would have dropped in a value from 1.2 crore to 0.8 crore. But with our FINA, like the strategies protective measures, they have a cost, but with limited downside. For example, while the index dropped 33% in 2027, our strategy is protected capital and recovered faster. By 2029, if you see, the Nifty investments is still 1 crore, but our like Nifty Bs or any Nifty Bs in mutual funds. But if you go for this FINA strategy, it grows the same capital to 1.5 crore after all this my protection cost. If you minus those things from 1.8 crore minus 26 lakhs, it will give you close to 1.5 crore. So the key takeaway is that your protection reduces losses in your bad years, and in stock market that happens. No one knows when. So that's why a lot of people invest in a few fixed deposit. They don't come to stock market because there is a downfall chances are very high. But if your protection is there, then you can easily manage those drawdown phases. So once you protect your money, it will allow you to compound your money in better way in longer term. So coming to this investment of 1 crore, how we achieve this? So we start investing 1 crore out of this uh, 1 crore, and out of this 5% goes to our hedge cost. Like you're buying a put, so 5 lakh is gone, and then uh, we create a synthetic future, and which gives you a market exposure close to 70 lakh. So even though you are investing in 70 lakh, but you'll pay close to just a 4.9 lakh as a cost, like because you are not paying all the money. That is called a cost. You have to pay like call buying and put selling. So what are the cost comes, which is 7% of the 27 lakh, which is 4.9 lakh or 5 lakh. So upfront we are paying a for the synthetic future and protection cost, we are paying close to 10 lakh. So out of 100, my 10 lakh has gone. Now 90 lakh is left. So I invest 30 lakh in the direct mutual fund, and for that I don't have to pay any cost. And then whatever the 60 lakh left, I will put in a yield fund or a debt mutual funds or a fixed deposits. So if you see in the overall in the end of the year, if the let's say market falls and gone everything wrong against your all your synthetic future or long future, so you paid we paid close to 10 lakh for this, but your fixed deposit has given a return of close to 4.8 lakhs or 5 lakh, I assume. So net the maximum loss is 5% max, and even though you have 100% equity exposure, you are limiting your maximum loss to 5%. So that is the beauty. But it will be not 5%. It will be close to 2 to 3% in real life scenario. But for understanding purpose, we have put for easy for everyone to understand. And if you see, like I've been given, like if you have just bought the Nifty 50 mutual funds and uh, you have not taken a protections, and and another things is like you have taken you have bought a synthetic future, and along with that you have taken a protections. So one lot of Nifty is close to 18 lakhs. So if you invest 18 lakh in a Nifty B's mutual funds, you're exposed around to 50% drawdown risk or downside. In sharp market crash, your portfolio could be dropped to 9 lakh from 18 to 9. So there is no built-in protection here. So you are at the mercy of the market. But our approach is different. We take a same 18 lakh and create a synthetic Nifty of positions, but we also purchase a protective put. So this will cost additional 5%, but it limits our downside risk. So even if severe downturn, your capital will be protected, and my maximum loss will be close to 90,000. And I have so when the other strategy has 9 lakh, my capital will be still 17.1 lakh. But over the last 20 years, if you see this Nifty, normally without protection, if you just bought the Nifty 50, you would have given close to 12% CAGR, and your money would have been 10x. Like 1 CR might have been 10 CR. Uh, but with a risk of minus 50%. But if you go for this new strategies, which is synthetic future with the protections, your money can still grow at 16% CAGR. and after 20 years it might be 23 times. But the part is that the risk is just a 5%. So uh, the traditional approach means it is high risk, like directly buying FTVs and high return. But our strategies offers low risk and high return. Coming to a comparison, so like how our strategy has performed in last 16 years with respect to uh, Nifty 50 direct, which we directly bought the Nifty 50 Bs. So now they put the theory in the test, Nifty 50 collapsed over 40%, 44% in 2009, but our is a modest 3.5%. So that is the difference between. So in a strong bull years like 2020, we don't just match the Nifty, we outperform the Nifty. So even though in a bull phase also we have beaten the market by 10% in 2010. So when you look at the full 16 years records, so Nifty delivered 12% CAGR with a maximum drawdown of 40%. But our strategy deliver a 17% CAGR and a maximum drawdown of -5%. So this message is clear: higher returns uh, and dramatically lower risk. The strategy we are talking about. The power of pairing intelligence market exposure with downside protection. That is what makes FINA a strategy built for longevity and peace of mind. So the point is that it reduces your risk, and we do a lot of research on that. So providing greater stability to your portfolio even during volatile years. So coming to trading as a business. So this is the second part why we left. Uh, so first part we have invested in mutual funds and synthetic futures and fixed deposit. We got all the returns. But pledging that money, you can start a business. So uh, in other business, this is not possible. Your all money is going to directly be invested in that business. But here there is an extra income you will get as trading as a business, and we'll see when you think about any business, like most people imagine setting up a shop or a factory or a services or a franchise. But trading options can be run a full-time business with some unique advantages. In traditional business, you have a fixed cost like rent, salaries, inventory. You also face competitions, changing customer demand, and operational challenges. Profits can be seasonal and unpredictable. So in the next slide, you'll see in option trading, your raw material is capital. And here the capital is your fixed, your pledged money. It is not actual money. It is just a margin money you are utilizing for option selling. And you don't need any physical inventory, no employee to manage, no rent to pay. The only cost is the brokerages and the transaction charges and maybe small algo fees. And the scalability in option trading is far better. And but in option trading also there are a lot of challenges like you have to understand how the option behaviors and the option is it is a derivative products and with the cost and the risk involved in that. So the risk management, the discipline, uh, it is like any other business. You manage that, it will be here also. So it is a very tough. However, the key difference in most business is that drawdown, because here also there are certain risks, and we'll do a side by side comparison. If you see like in the real world, if you say any franchise model, there is a case study is given here. So let's say you have 20 lakh capital in your fund, and you want to invest it somewhere. Let's say you go for a let's say franchise of Wala, and you take a 25. The initial investment is close to 25 to 45 lakhs. So your franchise fee is zero almost, but the return on investment, how much you are putting and how much you are getting, and the break even months. So break even months maybe 32. Here you given 20 24 months, but in actuality it will be 30 36 months. So similarly, let's say Lakh visa. The initially is 20 to 40 lakh investment is there. Franchise fee is very less, and you have to give some royalty fee every year. The break even also close to 12 to 8 months. and you always say that higher side of 18 to 24 months. ROA is close to 12 to 15% on your net investment. But here you are getting the like in option selling, you'll get the same thing on your pledge money, which is your margin money. Similarly, let's say go for a subway, you have to pay close to 35 to 40 lakh for that food franchise, and your break even is close to 18 to 36 months, and ROA is close to 10 to 12%. So a lot of interest cost will go. So what we're saying that whenever you choose a food or educational or retail or any services, every business has its own risk. So the important parameter is how much I'm getting on my investment money, how much time I'm taking to break even, and whether my local conditions or wherever opening, uh, whether that my business idea is feasible on that there or not. So coming to the option selling business, it is very straightforward. Like you just invest all your money in some good mutual funds or on some fixed deposit, and you place that money, you get an option selling margin. So and let's the same 2020 heavy like investments, you'll get close to 20-25% return, yearly return, if you manage the risk well, and we are doing it from last 4 5 years. And the fees are like maybe 2% or 4% according to the which service you are taking. Like particularly we charge some 2% on the capital, or it's a flat sometimes. The initial fee you charge very flat. But the advantage is that scalability. You can from start with 20 lakh, you saw that the results, then you can easily move to 50 lakh or 1 crore or 2 crore. Slowly you can move it. And but that is very difficult in traditional business. You cannot open another subway in a near area. It takes a lot of time. And like how much like if you are working in some big companies, whether you are able to provide give the same amount of time if you had opened the original traditional business. But in this, see, like your money is there, and you just need to monitor some of the positions, and you just give the login and passwords. Brokers will automatically authenticated everything. So your time will be saved, a lot of time, a lot of stress will be gone. Your money is in your own account in a year, more fixed deposit and CSDL accounts, right? No one can take it. Liquidity, very highly liquidity. Like in other business, you cannot, once you invested that money, you cannot take out immediately. But here, for your emergency purpose, you can break your fixed deposit and take those money, and that money is in your hand, just a one click away. So you can withdraw that money. So stress, very less stress as compared to others. And the only stress we see like during drawdown phase when market is making some losses for 2 3 months, continuous losses, no profit is coming. But that is also the possible in all other businesses also. So that time some stress is there. And here the oil creation in other businesses also happen. Here also happens. But here is that you have a little bit more peace of mind than running a traditional business. And there I was talking about that the winning probability is close to there 5%. But here in the long run, if you follow a systematic discipline approach, your probability will be 70-75% as an option seller. I'm not talking about option seller. I'm not buyer. I'm talking about option selling has a higher probability because the product is advantageous to the option seller. Coming like what exactly we do in algo trading. So in algo trading, we go through different option selling strategies like delta neutral. So you make profits when market goes up. When you make profit when market goes down also, and you also make profit when markets trade neutral. So in all three scenarios, normally you can handle through different various option strategies. So delta neutral strategies normally try to attack where market is normally in a range bound or sideway markets. So iron condor is there, iron fly there. There are a lot of adjustments there, rolling strangle, rolling straddles. There are certain directional strategies like when some technical indicator gives that market is moving in certain directions. Then there is something bull put spread or bear bull put spread for long, bear call spread for short for bear phases, call ratio back spread, put ratio back spread. So those are very advanced strategies are there to tackle, and a lot of adjustment is there to fight it back. So then even though there is some strategies that are intraday, which will just start at 960, 920 and end up by 330. And some strategies are positional, like you start 1 week before or 1 month before, and it will keep on running and automatically adjusting. through algo trading. So it is a combination of lot of strategies. Suddenly, and like we uses close to 30 to 40 strategies to minimize our risk. So on correlated strategy, we work together. So what is the key advantage is here? Like our algorithm automatically monitor, adjust, execute all the strategies, removing human emotions or improving discipline. This combination gives us the income potential across all kinds of market conditions. Coming to the same, like if you understand the options, like who are doing it, they might be knowing. But there are this is the base strategy I'm talking about. These are the normal people uses, but there are a lot of advanced things. Like if you combine, like there are like 16, there are all strategy can be combined together also. It is an you can say is a basket. So you have to handle all the scenarios, and sometimes you're successful. So our win rate in option trading, option seller as a 60-65% on days. But overall, it will give some close to 20-25%, and some in some years it may be 30-35% also if the I is very high. So uh, all this depends on our risk appetite and how what are the strategy we are using. Those will be automatically written in the programs and this will be executed. So the end point is like what we are talking. What are the options we have? Like if that I'm saying that if certain money has it in fixed deposit and they don't want to go for any trading option trading also, they can purely invest in mutual funds and take a protective put, or they can, if it effectively they want to utilize their money, they can go for a our strategies, Nifty 50 synthetic future with heads. So those are averagely given 16% and with maximum risk of -5%. So even though it's 1 crore, if you stay for 7, 8, or 20 years, it can go to 23 CR. It is very, very high even though in normal cases. So if you see, compare, if you're disciplined, you'll get that. But if you just someone said, okay, I don't want to put anything on investment, I will only go for trading. So we normally recommend no, because the trading is a little bit higher riskier side. So our risk aggregate it will give 20%, but the risk is also there minus 18%. Uh, so one share can go to 49 shares also. And the probabilities also will be if you cross first past 3-4 years you will be there because you are disciplined. Otherwise market will kick everyone, all of us, like if you don't follow our own disciplines. But we recommend that you follow both approach, like plus algo trading plus uh, uh, depth fund investment. So first preference is investment, then if someone allow they should give little bit allocate some money for algo trading. If the once they get confidence they can increase it. But if you see now, if 24% returns, that one share can goes to 100 share in 20 years. So it is a huge, like you, as we are talking about in initial financial planning, if you have the capital right now, or even though this 20 lakh can go to 20 CR in 20 years, whatever the capital you have, all the money it is directly proportional. So the point is that planning, execution, sticking with your own rules for longer time frame. That's what you can create lot of wealth. So this hybrid strategy combines the stability of depth and growth in synthetic equity exposure and some alpha from algo trading. So even though it carries a downside risk, but it has a lot of compounding potentials. So all the operations, all the options here, will give us for safer bets or good returns. I'll say fast strategies, and for higher returns, you go for the third strategy. Purely algo trading is a few people are doing. They can do only with you do all thing in pledging. Don't go for synthetic future. Only put all the pledging in depth funds. That also possible. So they'll get 8% from there. So how we are going to help? So we have segregated into two clubs total. One we made a gold club. Another is called uh, diamond club. In gold club, uh, platinum club. So in gold club, who have the money of 20 lakh and they want to grow it to 1 crore, and we'll helping them in that group. Like what are we'll directly talk with them and help in training them like how they can achieve this. What is the process they should follow, and how much they should allocate to fund to different sectors, and how much they should allocate to So all these decisions will be purely data driven, like risk management and portfolio protection. So without protecting our portfolio, we should move on. That is the first principle we follow. And whatever the things we follow for our money, and we'll be guiding others on the same line. So then coming to the this uh, the platinum club also, like who has the money of right now 1 crore, meaning if they have 1 crore, maybe their net asset might be close to 4 5 cr. So and they want to take it to next 5 cr in next 7 8 years. So in this group will be little bit more diversified portfolio allocation across multiple asset classes. So there is a advanced algo trading methods, and a little bit more uncorrelated strategy can be deployed. In 20 lakh, we can deploy maybe two strategies, but in 1 crore, maybe you can get 5 6 7 strategies together because of more capital. And it has lesser drawdown as compared to 20 lakh portfolio. 1 crore portfolio lesser drawdown with respect to their own capital because of diversification of the strategies. And eh, in short, this is a very serious wealth building tools. People who want to substantial growth or HNI clients, they who can withstand their money for 7 8 years, so they can see this growth. So coming to like what is the risk management things we works. This is the major part. Like even though it's a 20 25 lakh, it's a 1 crore investment. The hedging is fast. So we use strategic offset. Like we buy hedges to protect our portfolios in market swings or any black swan events. And diversification. So our money is not put in a single basket or single stock or single mutual funds, or we put go for a land also, land on um, REIT funds as well as um, gold and fixed deposits, all the debt funds. And portfolio rebalance is required in every 1 year. You should rebalance like your allocation, whatever the initial allocation you have you should stick to the rebalance. And we work on an inflation risk. We invest assets that can outpace inflation. So purchasing power growth. The most important factor is max drawdown. The more we protect our money, it has the chances to compound in future. But because if you go for a little higher return, the risk is coming. So the biggest challenge is not return. If you manage our risk properly, return is a byproduct. That's what. So that's we believe. So how much maximum loss I can take? How much maximum? That is the only things we decide in algo trading and all our investment strategies. So yeah, that's why the 15% cap we have kept, but still now it has never hit 15%. So we are still below 8% in last 5 years. So market risk, there is a separate risk which is beyond our control, like market will fall tomorrow because of some geopolitical things, or the operation, like my execution is not happening properly. There are a lot of slippages coming because of delay. There is a system risk, like your broker is down or NS is down, like or most probably brokers many times down. Then how to take a counter positions in other broker. Regulatory risk, SEBI will be regulatory, meaning our SEBI and compliance rules also coming under SEBI rules. So whatever they are coming, we have to stick. And because they are really protecting the retail investors, and whatever the rules they are following, we should stick with that rules and see whether it is still or we can fulfill all these goals, whatever we have planned by just sticking with the rules. Geopolitical risk, the so maximum time, like you see currently, whatever the US America things is happening, and then we see like what are the compliance risk is there, in the sense of uh, like Ukraine, Russia war, or Iran Israel wars are there. So then we are coming to see, this is a beautiful graph is given, like evaluation of investment of 1 crore after 20 years. That's how it has grown. So if you just stick to this 24% CAGR, if we can achieve this 24% return, annual return, that 5 year, this 1 crore can go to 4 crore, or in 10th year it will get go to 13 crore. The year 15 it can go to 41 crore, and year 20 it can go to 105 crores. So key insight is this consistencies in returns. Even with market risk, you can turn a one-time large investment into a massive wealth over long term. So this is a very linear given, but there is a risk also. The graph will be little bit sinusoidal. But when you put in the average CAGR, this graph will looks like this. So the key learning from this slide is that it is not the timing. It is how much time you are staying in the market. So I'm saying that whatever the money you have, whatever the safer money, which you don't need for 7, 10 years, uh, put for a little bit riskier instruments for higher returns, which will fulfill your dreams. Like this money only fulfill your dreams, like whatever you have, like which you discussed in your financial planning, longer term growth. Then coming to frequently asked question section. How much minimum? Yeah, minimum I should say like if you have 20 lakh, you should start option selling. Otherwise, this is not because in 20 lakh maybe two or one strategy will be running. Because of this cost and everything, that will be not viable. Lesser money or some significant return you want to see, and we never promote option buying. So we're not purely an option sellers. Option buying we do as a part of strategies. Like if there is a three sell will be there, one buy we put to protect, or maybe to 3x buy overnight protection is buy. It never as a strategy we use buying as a thing. So you can like trial period anytime you can do paper trading on this Triton platform or any algo platform we use. Minimum assurance return. See, there is in the market there is never anything called assured. But in long term probabilities, we say that we will at least beat Nifty by 2-3% minimum, and maximum we don't no one sees, and maximum will say average is 24%. How to start with? See, we have a Telegram group. If are interested to join our both club, so just ping it, and we have a Google form is there. Just fill that form, and we'll reach out to you. There is performance fees, yes. That is because we are putting a lot of effort in building those algo strategies, and when building these algo strategies, we need help. We have to there is a lot of analysis goes on. So we charge close to 2% of the capital. Sometimes it is a flat minimum of 7,000-8,000 per quarter. Monthly it will be coming around 3,500. So exit criteria for NC, this exit criteria for investors, like if the money is in your own account and you can withdraw money at any time on your wish, like a fixed deposit and for emergency purposes. No one is, there is no strict rules who can withdraw or not. It is your money, you can play with in the way you want. Maximum loss in portfolio, yeah, if you go for just synthetic future investment size, maximum it will go to 4-5%. We have kept it 8% for a mental stability purpose. It is something, it cannot happen 8%. So 5-6% if you really protected well, and you will get 12 to 15% average CAGR. So similarly, if you go for both investment and trading, then you can see 15-16% drawdown. But here you have put 20% because the psychology. If you put higher drawdown in your mind, then the just mind will be stable. Do user have to share their passwords with your company? No, no. You will never take any passwords because we don't manage others' money. So we will train you. We are good in programming. We'll share the codes with you. You can do on your own, and we'll help you if there is error comes in between when in executing or some issues. That is the things we do, and we'll put lot of guidelines how to you should do achieve the particular business part. Trading investment is less complex as compared to trading. Coming to the contact details, yes, these are our daily update groups we put. Telegram daily update group you can join and you can ask. You can see what we are doing, how our portfolio is doing, and Telegram discussion group is there where if you have any more questions you can ask and we'll solve this. And we have given a WhatsApp number. You can directly message on this WhatsApp number if you have any questions. And this is a Google form. Like this will be given in the Telegram group. Like if anyone interested to join our Gold Club or Platinum Club, they can directly join. I hope that's all from our end. I would like to see if you want to grow with us. We are also growing, and we are sharing this knowledge with others who have similar financial goals, and they can join our group, and we'll together we'll grow and we'll see some results after 7 8 years. So that's all. Thank you everyone who is listening to this, and we join the group, original Telegram group, and from there we'll guide how to join our exclusive become membership group. Thanks all. Thank you very much.